Good morning. The dollar is wreaking havoc with markets this morning. Let's break it down. Let's break it down. U.S. markets fell yesterday at the mention of potential rate hikes in 2023, a bit sooner than markets had expected. The Dow led indices down at 0.77%, while the dollar surged, putting commodities and other currencies to relative shame. The 10-year bond yield jumped 5 points to 1.548%, especially as Fed officials began to timetable the tapering off of bond bank buying. Although mortgage applications increased to 4.2% week on week, building permits regressed a bit and along with housing starts missed expectations. North of the border, consumer inflation came in at a better than expected 2.8% year on year for May in Canada. At 91.48, the US dollar index hit a 2-month high overnight. The jump was certainly dramatic, and it's appearing in reverse throughout related charts from China to Texas. We're well above R2, a morning star appearing at the top, and that overbought RSI already plunging south. So there's a very good chance we're going to correct ourselves downwards for at least until more data comes in to justify that level. This afternoon, for example, jobless claims at 12:30 GMT. European indices managed to squeeze by the Fed-led global drop. The CAC FTSE index added almost a 0.5% thanks to chemical stocks restarting leisure and utilities. Wages growth throughout the zone in Q1 regressed a bit to 2.2% more than the same quarter last year, and the euro is down, also on the IFO's latest projections for Germany's 2022 GDP, down a half point to 3.3%. Still ahead today, the EU's CPI data. The Yuan plunged sharply to a 3-week low this morning, prompting a People's Central Bank forum to urge corporates to hedge against Yuan volatility. Tempered by government restrictions, house prices are rising a little less rapidly, and shares throughout the continent are mixed. The Shanghai Composite down a fraction, but the Shenzhen up by nearly 1%. Australia and Japan are bleeding, the Nikkei down 1%. The Australian dollar is up thanks to a 4-tick drop in unemployment to 5.1% and a nice rise in the participation rate. In New Zealand, Q1 GDP is up 1.6% Q on Q thanks to increasing retail activities and a housing boom, according to Reuters. Tonight, CPIs from Japan, where the central bank will deliver its interest rate decision at 3 a.m. tomorrow morning. Bitcoin lost its 40K foothold yesterday despite Elon Musk's promise to possibly reinstate the coin. Oil touched 71.40 overnight on its way down the Fed dollar hatch before recovering somewhat this morning. The EIA yesterday reported a welcome 7.35 million barrel drawdown in crude stocks, but the resulting lift was quashed by dollar strength. Again, that white circle is showing us the sudden jump in the dollar, but it's much more calmer. Have we broken the uptrend? Well, the blue circles show us that each retracement has been a double bottom, and so far we've only seen one bottom here. We're already recovering, crossing above the moving average, and the oversold RSI is strongly positive. I think the double pattern here will hold simply because of the bearish inclination of that moving average. The reversal at 72.30 maybe? Well, for betting's sake. After that, we'll have to see if we break below the lower trend line for the reversal. Meanwhile, meme stocks making the rounds. The Wall Street Journal this morning reports a memo from TikTok's ByteDance saying its gross profit surged by 93% in 2020 to $19 billion. Unfortunately, they are not traded. Ryanair is suing the British government over its indecision in Irish border politics, which is encumbering airline policy planning. And finally, congratulations to Microsoft CEO Satya Nadella, who is now also replacing John Thompson as the company's chairman. And so we come to the end of yet another gripping show. We'll have more for you tomorrow.